I think one way of thinking about it is that you have huge downward pressure on growth from the leveraging cycle. Households have probably effectively already levered to a very large degree. So the savings rate has come up basically from 0, now we're closer to 4%. If you look at the debt to income, household debt to income ratio, we're back close to the trend that existed before the boom from 2003 to 2008. So we're back on a trend line that was a more normal improvement or increase in debt to income. The total payments that households do on all their obligations, mortgages, leases, whatever consumer credit they have, divided by their income is also at a multi-decade low. So the leveraging is one of the issues, one of the reasons why the economy has been so weak. This is true for the household sector. It was true and still is true to some degree for the bank sector. Now, if we would only look at the private balance sheets, I would conclude that the economy should start to accelerate and grow much more quickly. The problem is that you've taken this over-leverage from the private balance sheet and you've put it on the public balance sheet. So now the federal government is highly indebted. The debt held by the public as a percentage of GDP doubled since 2008 from about 35% to almost 70%. So until that problem doesn't get fixed, the economy is going to continue to suffer from the deleveraging. So the government is not adding dramatically to growth. The private sector is in much better shape, but everybody's worried to invest or consume because you don't know exactly where taxes are going to go. So the entire uncertainty surrounding the fiscal outlook is still going to dampen growth. Now, the positive forces for the economy, and the reason why the economy hasn't done worse than it has, is, as you mentioned, the ultra-low interest rates. If you compare what the Fed did relative to, say, the deflation spiral that we had in Japan, the Fed reacted very, very quickly. In Japan, it took them about 7 years to really start to clean up the balance sheets of the banks. In the US, it was done basically from the peak of the equity markets in 2007. Within a year or two, the balance sheets of the banks were recapitalized. And the Bank of Japan only started injecting liquidity or doing quantitative easing about 10 years later in 2001, whereas the Fed started doing that again 1 year later when Lehman collapsed. So the Fed's response, the government's response, has been much more forceful and much more quickly, and that's helping you to support the economy. I think at this juncture, the downward pressure from fiscal deleveraging and the anxiety surrounding the fiscal outlook is offset by the upward pressure from very, very lax monetary policy and much better private balance sheets. So I think they offset each other more or less. So growth is going to continue to be very moderate for a couple of years. Once you go through the correction of the fiscal side, then obviously you're setting yourself up for a much, much stronger growth rate. But I think it's going to take a couple of years to get there.